From the start of the business day to the closing bell and beyond, CNBC brings you up-to-the-minute live coverage of all the action from Wall Street. CNBC. Watch it. Use it.
The ballot box is sealed and votes are in on Carl Icahn's proposal to split USX in two. Welcome back to Business View. I'm Sue Herrera.
And I'm Neil Cavitto filling in for Dean Shepard. Results will not be known for at least a week following the company's annual meeting today, which ended up being more of a referendum on the company's future. To split or not to split, Carl Icahn is looking to boost the value of USX by spinning off its steel businesses to shareholders. He needs a majority of the vote to separate the more profitable Marathon Oil subsidiary from U.S. Steel. In composite trading today, USX closed down 50 cents a share to 33.5. And on Wall Street, the Dow Jones Industrial Average climbed over 11 points to 2721.62 on 132 2/3 million shares. The transports climbed almost 9.5 points to 1154.52. Utilities climbed over 2 points to 1051.
Here's a look at some of the stocks that moved in today's market. Procter & Gamble jumped 1.5 points to 75. Kidder Peabody said investors were flocking to quality consumer issues and rated the stock a buy. Technical stocks continued to be strong, with digital equipment leading the way, up 1 1/8 to 89 1/8. Janney Montgomery Scott upgraded DEC to a buy. Also in the tech sector, NCR gained a quarter to 66 7/8. The company unveiled a new family of personal computers that are based on Intel's new microchip. That announcement pushed shares of Intel up a point to 43. Emo Industries jumped 2.5 to $18 a share. A judge substantially cut the damages assessed against the power systems maker in a suit filed by Lilco, the New York area utility. Dillard Department Stores gained 2.25 to $78 a share. Wall Street showed continued enthusiasm over Dillard's acquisition of the Ivy's chain from BAT Industries. Nordstrom rose 1.5 to 29. Bear Stearns said investors were relieved that a 60 Minutes profile of the service-oriented retailer presented a balanced picture. And Motorola gained 1 7/8 to 72.5. County NatWest made positive comments and rated that stock a strong buy.
As we told you earlier in the program, the Treasury bill market marks this week with its quarterly refunding auction, selling off $30.5 billion in bonds to balance the Treasury's books. The amount was close to earlier predictions, but what's changing is the number of individual investors who are bypassing the standard system of banks and brokers and going right to the Fed to buy those bonds. CNBC's Dave Montes reports.
Like the 11 others across the country, the Federal Reserve Bank in New York is more and more catering to the individual investor rather than the 44 primary dealers, investment banks, and brokerage houses that actually set the interest rate by buying in bulk if the rate is right from Uncle Sam. Individuals who bid at a Fed auction get the average rate of all the big boys' bids accepted, but they don't pay any brokerage fees or commissions that can run from $50 up. If the interest rates posted are attractive enough, these people will bodily trek to the Fed to gobble up a good deal.
I just thought that it would save me the commission involved in purchasing the securities.
I'm retired, so I have the time. When I wasn't retired, so I paid the commission.
The Fed offers issues ranging from 3 months to 30 years, which can vary in yield by as much as a full percentage point. How much of an inconvenience is it to do it yourself? It can be done entirely by mail, or the really anxious can just show up.
Fill out an application to purchase Treasury securities. You will give us a check made payable to the Federal Reserve Bank of New York.
The Fed says, though, that this is not designed for any individual investor who might plan on selling the securities before full maturity. That requires excessive extra paperwork and also requires that a broker sell it, who would charge a fee and or a commission.
Individuals are a big slice of the government's investment pool. A one-year bill auctioned off May 3rd showed that 1 out of every $6 invested came from individuals. Does that have the brokerage houses biting their nails? No, says David Jones, bond analyst at Aubrey Larston.
You, as an individual, decide to go through a bank or a brokerage firm, you're going to pay a fee, but probably in return for that, you will get at least a viewpoint.
The surge in demand among individuals buying direct from the Fed is credited partly to a recent upswing in interest rates and the explosion of money media. More information about Treasuries, broadcast, and in print. Dave Montes, CNBC, New York.
Well, our guest this evening says tomorrow's leg of the U.S. Treasury auction should attract a lot of individual investors.
But Thursday's long bond auction will be more influenced by the degree of participation by the Japanese. Here to tell us what to look for over the next few days is Tom Herman. He's a reporter covering the financial markets for the Wall Street Journal. Also with us, Bill Woman, chief economist at Business Week magazine. Pleasure to have you here with us, particularly you. Let me ask you something here. Up until the employment data came out, everyone was saying, how high is high? How high do the rates go? What will it take to keep the Japanese coming? Now we have a stronger bond market, or so it would appear. Will they buy into strength?
Probably yes. Most of the money managers I speak to think interest rates have either reached their peak or are very close to it. As you and Sue reported earlier, that looks like a very good time to buy. Most of the notes and bonds to be sold this week will be about 8.75% to 9%. Historically,
to 9, that it will go to 9.
Possibly, yes. Possibly on the 30-year bond. The 3-year and the 10-year sold Tuesday and Wednesday will probably be closer to 8.75%. But for the average investor, those are very attractive rates long term. The stock market over the last 60 years has turned in a return of about 10%. That's only about a point higher. So when you're talking about a government-guaranteed note and bond, that's very attractive, especially when you recall it's free from all state and local taxes.
Absolutely. Now, Saudi Arabia, that name was thrown about, I'd say 3 or 4 times last week, that if the Japanese weren't going to be the big bidders, Saudi Arabia would be in, and perhaps on some of the shorter-term issues as well. Have they faded into the background now?
No, I've heard those rumors too, and I've heard that they might be also interested in buying the longer-term ones, the 10-year and the 30-year, and that's partly because of the strength of the dollar. Also, of course, this very high interest rate, 8.75% to 9%, will attract a lot of foreign buying. But to the Saudis, being as close as they are to the Soviet Union, the dollar looks very strong, and that's another reason to buy U.S. Treasury bonds.
Tom, we always hear about the Japanese are going to buy, they're not going to buy, but they always seem to end up by buying. I mean, the question is, what would it take for the Japanese to go on a buyer strike in the bond market, given the stake they have in the stability of the American economy?
Big problems back home. That's the simple answer. If the Japanese financial markets start to crumble, Japanese investors may not have any choice. They may have to pull their money back home to shore up their own markets. In fact, there was a rumor a few weeks ago, as you know, that Yamaichi had some trouble, and there were rumors then that some of their clients were pulling their money back home. However, the Japanese markets have stabilized since then, and that's why I agree with what you said before, that the Japanese will be buyers at this auction, and in large amounts.
Can you ever see a repeat of the situation in February where the 10-year yield eclipsed that of the 30-year?
It's very possible. It's already close to it right now, Neil. But for the average investor, it's probably not going to make much of a difference. They're not going to buy the 30-year bond. They can get the same interest rate on 10 years as on 30 years, so why bother locking up your money for 30 years?
Well, could the Japanese be of the same opinion, or whomever?
The Japanese are much longer-term investors. Their insurance companies and their trust banks like to buy 30-year bonds. They are much more accustomed to buying 30-year bonds than 10-year.
Plus, they could also buy them and just turn right around and unload them as well. They've done that in the past, too.
Oh, sure, and that's very possible, especially if their economy hits another pothole, as it had a few quarters ago.
Tom, have you ever known a time when the consensus on the interest rate forecast was right?
That's
Serious,
a good question.
Seriously.
Hardly ever. We've taken a survey every 6 months since 1982, and once or twice out of all that time has the consensus been right. It was wrong again 6 months ago. 6 months ago, out of 40 economists that we talked to, 39 said rates were going down, and of course rates went up. That was a great sign that rates were heading up.
So now that everybody's forecasting a good auction, what's the probability that the auction will be bad?
The auctions usually are a little bit easier to forecast than interest rates.
Well, we always have this specter, as you know, the Resolution Trust Corporation that we were alluding to here. The fear is that, all right, let's say we get through this refunding okay. The RTC comes to bat, obviously, with a variety of options in the future. Their borrowing needs are extensive. How big an impact do you think they're going to have?
It could keep rates from dropping very far, as Chuck Clow mentioned. That's one of the big problems with forecasting a sharp drop in rates.
Them up?
It's doubtful that it's going to push them up very far because the economy doesn't look that strong. If the economy remains moderate or even sluggish, as people now think it is, interest rates are either going to go down a little bit or maybe half a percentage point, which would be quite a bit. But for the average investor, that only makes Treasury notes and bonds this week even better.
Tom, are you surprised that they didn't tack more onto the refunding for the Resolution Trust Corporation? Was that a political victory for the administration versus Seidman?
That's a tough call. The administration doesn't like to surprise the bond markets. The bond markets were waiting for a $30 billion plus refunding. If the Treasury suddenly came out with $32 billion or $33 billion, that could have set off alarm bells and made people say, well, maybe we ought to wait. there's still a lot of Treasury borrowing to do. There's still a lot of Ref Corp borrowing to do. And that's one big problem with forecasting lower rates. But no, I'm not really surprised that they held back on that.
And in terms of Ref Corp and whether or not, this is a whole nother issue really, I hesitate to get into it. We've got about 30 seconds. You see a 40-year bond out there again?
No.
No way.
No.
They learned their lesson, huh?
The Treasury did learn their lesson. They got burned badly. They were surprised at how bad the market reaction was, and I think that idea is dead.
Rep Corp isn't slighted.
No.
All right, we'll have to leave it at that, gentlemen. We've been speaking tonight with Tom Herman. He's a reporter with the Wall Street Journal, and of course, Bill Woolman, chief economist for Business Week magazine and CNBC. We'll be right back with a look at the action in the Asian and European markets. Stay with us.
You're watching CNBC. I'm Mark Haynes.
And I'm Gail Buckner. Get a financial head start on your day with CNBC's World Business.
Find out how stocks and the dollar fared in Tokyo and other Asian markets.
And whether the trend is carrying over in early European trading.
CNBC's World Business covers the global markets.
Checking the Asian and European markets this Monday, there was a surge in the Tokyo stock market after a four-day weekend in Japan. The blue-chip Nikkei average rose more than 2.5%, gaining more than 782 points on the trading day. Markets in London were closed for a national bank holiday, and in Germany, shares ended the day about 1% higher, defying predictions about an imminent correction after last week's 5.5% run-up. The Frankfurt DAX closing up just over 22 points at 1934.95.
In our World Watch segment tonight, the proposal to increase contributions to the International Monetary Fund faced some opposition today. Treasury Secretary Nicholas Brady had to defend the 50% or $60 billion increase. Developing nations, along with the IMF's managing director, argued for a 100% increase. Also at issue, the ranking of shareholders. The U.S. still remains the largest IMF shareholder. Japan and West Germany share second, and Britain and France hold equal positions right behind.
And the UK made considerable progress in reaching an agreement in principle, which they hope to finalize in the coming days.
Industrial nations also told third world countries they wanted the power to suspend bad debtors.
Meanwhile, in Brussels, Belgium, Czechoslovakia and the European community have agreed to cooperate more closely on scientific matters, including nuclear energy. The 10-year agreement also eases Czechoslovakia's restrictions on imports. It calls for closer ties between Czechoslovakia and the EC in several areas, including agricultural, environmental protection, tourism, and telecommunications. The Czech Prime Minister said he wants his country to become an EC member by the end of the century.
The president of South Korea went on television today to try and stabilize that country's political and economic turmoil. No Tae-woo said in a nationally televised speech that the ruling government has made significant strides toward democracy. But he also admitted the government has failed to earn the people's trust. As the president made his remarks during a televised address, student demonstrators attacked the headquarters of the government's ruling party. That's just one of the many recent clashes between police and demonstrators over the imprisonment of militant union leaders at Hyundai Heavy Industries. 12 union members were arrested in a government crackdown April 28th.
Watching CNBC, the Consumer News and Business Channel.
From the start of the business day to the closing bell and beyond, CNBC brings you up-to-the-minute live coverage of all the action from Wall Street. CNBC. Watch it. Use it.
There have been a lot of stories about penny stock fraud and the shady practices that go on in the boiler room offices of penny stock brokers. But rare is the chance to see inside one and hear from a former penny stock broker just how they work. CNBC's Kevin McCullough has been gathering information about penny stock fraud, something that regulators now say costs investors $2 billion a year.
This is undercover videotape of a boiler room in Los Angeles obtained by NBC News, where high-pressure salesmen peddled silver contracts with classic boiler room technique.
If you want to make money, you'll have to listen to my advice.
And this is David Sabins, a man who says he has inside knowledge of just how boiler rooms work. From late 1986 to February 88, Sabins says he sold penny stocks for the Blinder Robinson Company in New Orleans and Indianapolis.
These were boiler rooms, right?
Oh, yes, sir. 100%. Now, we were a full-service brokerage, but it was a boiler room.
At the heart of any boiler room operation, like the one Sabins worked in at this office building, is the strategy to deflect customers' attention away from what they are buying by promising the potential of easy money.
If you studied the fundamentals, you'd never buy it. In other words, the book value of the stock was just minuscule.
He says his trainer told him how to know when the sales call went just right.
He said the sign of a good sale is when the fella calls you back in a half hour and says, "Dave, what was the name of that stock I bought?"
From his office here in Indianapolis, Sabins called clients all over the country, clients as far away as New Orleans and New York City, with an elaborate sales pitch.
If you have a client and they diversify and use leverage, they should make a lot of money. In other words, the more you sell them, the more stocks they buy, the more of the stocks they buy, the more money they'll make. When in actuality, the more stocks they buy, the more money they put in, and the more shares they buy, the more money they lose.
One man who hasn't lost money is the head of Blinder Robinson, Meyer Blinder. He's become a millionaire selling penny stocks. He has this enormous penthouse office in Denver, complete with its own swimming pool. His attorney said he would be unavailable to comment on our story. As for the allegations from David Sabins, Blinder attorney Cal Glovin said, quote, "Our response to Mr. Sabins will be in the courthouse." For James Smith, Sabins' account of boiler room tactics is sadly familiar. Smith prosecutes securities fraud for the state of New Jersey.
In order to commit any crime, you need the means, you need the opportunity, and you need the motive. Now, obviously here the motive is simply money, and there's lots of money to be made by agents.
Sabins says he made $89,000 his first year. He says he was fired because his manager wanted to take over his account. He says one way to make money was selling what are called blind pool stocks, or firms with no assets and no track record.
We weren't selling on PE ratios. We were selling on emotion and trust and curiosity and on people that were players. I mean, these people wanted to play, and you were giving them a chance to play the market.
These blank check blind pool offerings, which are allowed to go effective and flood the market with billions of shares of stock, are really what are being used to defraud the public. The public is getting nothing but paper, and they're giving up their hard-earned cash.
David Sabins has left the securities business now. He says working for Blinder Robinson has been a black mark on his career. Kevin McCullough, CNBC, Indianapolis.
Blinder Robinson is currently fighting a suspension order from the Securities and Exchange Commission. Meyer Blinder himself is the subject of a federal grand jury racketeering indictment.
A House subcommittee continued its investigation today into doctor-supervised personal diet programs. Last year, the diet industry attracted 65 million Americans and generated $33 billion in revenues. But the industry is virtually unregulated, and the chairman of the Subcommittee on Regulation, Business Opportunities, and Energy says consumers should be wary of the health and safety risks from rapid weight loss dieting.
Let's make no mistake about it. There are no standards out there today. The Federal Trade Commission can use its existing statutes with respect to misleading advertising, but there aren't even any barometers in some of these areas to determine what is misleading advertising.
Medical experts have testified that 90% of rapid weight loss dieters will gain all their weight back or more within 2 years.
Consumers who bought 1985 Plymouths and Dodges should be out on the lookout. Chrysler will be mailing you a notice about a recall. The third largest automaker says 8 models of the 1985 Plymouth and Dodge won't meet federal emission standards. I should say that they don't meet federal emission standards. And they must have the carburetor choke system replaced. Some 384,000 cars are affected. Chrysler, Plymouth, and Dodge dealers will do that work for free.
This program is sponsored in part by GE. At GE, we bring good things to life.
Well, finally tonight, business meeting and boredom. Those two are words often used synonymously in corporate circles, but they don't have to be that way. CNBC's Taryn Gottlieb reports.
This is a typical business meeting. Slides, numbers, notes. Few merit descriptions any brighter than this.
So far it's been pretty serious, boring, a lot of numbers, statistics.
While they're inside, this is inevitably what most participants are daydreaming about. The break. That's a feeling production companies are capitalizing on in a new breed of films produced specially for the business meeting crowd.
You don't want to cause a decrease in productivity, do you? No. Then you pledge not to take a break, don't you? Okay, now for a little test.
They break up the monotony of the meeting. Warm the meeting up a little bit.
We range from the government using our films to big corporations to Batesville Casket Center, which is, and obviously they need our humor.
Muppet Meeting Films have been creating company capers for 15 years. $550 gives a purchaser unlimited use. Siemens International has shown them for more than a decade.
We start them off the first day. People will tend to loosen up during the rest of the meeting.
Video Arts incorporates Monty Python funny man John Cleese in many of its 85 office offerings.
Do you think it would make things easier if I came and slept at the office?
Why don't you come and sleep at the meetings? No one else does.
But some observers think staging an effective meeting is no laughing matter. Dr. Arthur Shore coaches people on how to lead meetings. He thinks canned humor could upstage the conference.
If a meeting is extremely effective, then people would not be looking for comic relief.
A cute clip is no substitute for a poor meeting, but most instructors welcome the added help.
Hey, the coffee's ready. What?
Taryn Gottlieb, CNBC, New Jersey.
That's it for this edition of Business View for Monday evening. I'm Sue Herrera.
And I'm Neil Cavito, sitting in for Dean Shepard. Thanks for joining us. We'll see you again tomorrow on Business View.
You're watching CNBC, the Consumer News and Business Channel.